Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? It's tax day, right? This is our FinTips series just to help you with really quick topics, get the hell out of the way so you can get back to what's important to you. And I know it's tax day. We help our customers with all of their tax efficient needs there. We don't do their taxes for them, but we help them with everything along the way. And we're financial advisors that work with you no matter how big or how small you are, giving you all those little tips to make sure your investments are handled correctly. We do that for our customers, and then help you with your net worth. We teach you along the way to help you grow your net worth as efficiently as possible. It's time financial planners, financial advisors work with anyone and give them the same tips that the wealthy get. Well, it is tax day, and I'm sure you filed your taxes. You didn't wait till the last minute, and hopefully you didn't wait till the last minute. I sort of waited till the last minute, but you know, whatever. So here's what I want you to do. If you got a refund and you just started investing for the first time, maybe you saw the amount that you got back and you said, wow, that's great. Maybe I can get started on my investments. I'm going to give you 4 tips today. Number 1, I want you to meet with a financial advisor or a financial planner. Now, naturally, I'm here marketing myself, but it wouldn't be right if I didn't include other people as well. So I want to give you a tip of somewhere that maybe you'll look. The first thing I want you to do is look for someone that can help you. It may be us here at Jazz Wealth. It may be somebody completely different. Maybe you say, Dustin, I don't need your service. I'm handling my investments. I like handling my investments, but I do need a plan, and I wouldn't mind if someone could share those tips and tricks with me just one time. So what I want you to do is look for the XY Planning Network, right? These guys are financial planners. There's an N in financial planning, I know that. But this is a very, very cool organization where they'll pair you up with a financial advisor or financial planner in your area. We're not members of the XY Planning Network, nor am I affiliated with them in any way, but it sort of strips back the intimidation of financial planners. You normally picture like an older guy in a leather wingback chair in a suit and tie who's pretending to know more about money than the next guy. Well, they got rid of all of that. Basically, it's younger. It's people that are interested in financial planning that help you with everything along the way. Now, it can range anywhere from a couple $100s to a couple thousand, depending on what it is that you need. But maybe you just need a roadmap. You just say, hey, someone tell me what to do. How do I budget my money? How do I save efficiently? Maybe do some estate planning. Figure out what I need for retirement. Check out the XY Planning Network, and that hopefully will help you there. We are financial advisors here. Kind of how it works is, I'll relate it to an airline, really. If you are someone who says, I got this. Look, I just want to get on a plane and I want to go from Tampa to Atlanta as cheap as possible. Well, that might be a robo-advisor. You may be looking for something like that where they'll just basically charge you next to nothing and give you that sort of robo service. You pick what's best for you. They handle the investments. It's all automated. You really can't call and ask questions, get any kind of help, but they have lots of calculators and stuff. You got Betterment, Wealthfront, Vanguard, although I don't really suggest the Vanguard one there because they have an advisory service and they charge you very little, but they just tell you what Vanguard funds to buy. So couldn't you just use them, figure out what funds they tell you to buy, and then just cancel the service? I'm not sure I understand what the offering is there. They don't really help with advice, but you've got a lot of great choices. Like I said, Betterment, Wealthfront, and Vanguard if you're interested. All the brokerage firms offer some kind of automated investing service, charge you next to nothing, and that'll just get you on your way. That's like getting on Spirit Airlines from Tampa to Atlanta. It will be the cheapest flight you've ever been on. They'll charge you for all the other stuff, but you may never need the other stuff. Maybe you brought your own water, your own snacks, and you just don't need all the extras, and so that would be that example. Next, you have someone like us. Now, what we are someone that will help you with everything and anything along the way, the planning, the help, the assistance, the investing. We'll teach you along the way. Full transparency, we teach every Thursday to help our customers grow their net worth in any way possible. We'll work with you no matter what size. We're going to charge you a little bit more because we work with you. We're a hands-on approach here. We just don't stop. We want to constantly help you grow. So that may be something. And then after that is going to be like the full service companies, your Goldman Sachs, Franklin Templetons, things like that. Basically, those companies, if you are qualified to work with them, they've already found you, right? Some of you have a net worth that's just really starting to get up there, and they're like Secret Service, man. They come knocking on your door. You'll get advertisements directed just to you to come have dinner with them, and sort of they'll help you with all that. Basically, if you have enough money, they'll find you. You don't have to find them. So that's tip number 1. Get some help. Get somebody who knows more than you to push you in the right direction. And maybe that's all you need, right? Just a little bit of a push there. So that's number 1. Number two, I don't want you to stop with whatever the deposit is, right? So continue doing this investing. Let this momentum build. For example, if you said that maybe you got like a $2,000 or $3,000 refund. Okay, cool. You've invested that. Great, good start, right? You're off to a good start. I'm going to pretend you're 30 years old here. Let's say you have somebody that put in the $3,000 refund and they never invested again. They got to 65 years old and they're like, that's it. That's all I could do. I invested. I did my part. That money has grown. Let's say somebody did the $3,000. You didn't stop and you put in $20 a week even. Just something simple, right? Just to keep that ball rolling. You kept growing those investments. Well, if you're 30 years old, by the time you reach 65, you're going to be impressed here. Raw numbers, simple 7% return here, no inflation. You're going to have $140,000 more just by doing $20 a week. $20 a week is not that big of a deal, right? Now, if that gets you to your goal, great. You should know exactly how much you're saving to hit the exact goal you're trying to hit. There's nothing worse than having someone who's in their 60s find out that they didn't save enough. There's not enough time. We can't go back in time and invest more, and now we're stressed, right? Now all of a sudden they go, oh my God, I don't have enough money. What am I going to do? So don't stop with the refund. If you put in your first $2,000, $3,000 from this refund, do something. $20, $25, whatever it may be. And so that's number two, okay? Tip number three, if you are going to go the DIY route and you're going to start picking your investments and you're like, I don't know, this all is interesting to me, but I have no idea what to pick. Start with what you know. What do you know as far as investments? You may not know all the ins and outs, and I get that. There's a lot of great videos that we offer here to help you with that, but it may be that you know of some individual stocks, right? You could start there. Maybe you're able to just buy and sell stocks and sort of build a portfolio that way. Think about it. You know Microsoft. You know Apple, right? Oops. Well, that's Apple. AAPL. You know like Verizon, VZ, you know AT&T, maybe you know Target, right? Just by picking a handful of names, you got some tech stocks, some software, you got some big mega cap stocks that pay dividends a little bit slower. You got some retail in there, Walmart, I'll throw another retail in there. You know some of these names. You may say, I'm an index fund guy. I read about these index funds. I got to just get in these index funds. Well, I want you to think about which one. You got the S&P 500. That's the one that everybody defaults to. What if you could do better? Later this week, I'm going to do a video on how you could do better based on a study from a PhD, a financial planner with a PhD. I'm going to share that with you later this week. You've got the NASDAQ. You've got the Russell 2000, right? You've got the Dow, if that's something you're interested in. A lot of people don't pick the Dow. It's a small group of stocks. But you've got plenty of choices in this mix here where you could just be an index fund person. Now, one little word of caution. Keep the stock picking to a minimum. It's very easy to get excited and say, okay, I bought a few stocks. I see they're doing well. Everything's good. It's very easy to say, I'm going to buy a few more. Or Microsoft, reported earnings. Everything's great. I'm going to sell that stock. Save the stock picking, the active investing for a separate account. Retirement needs to be as efficient as possible. Remember, the clock is ticking. You are 30, 31, 32, 36, 40, 42, and so on, right? The clock is ticking. We don't want to mess that up, right? So let's not mess up retirement. Let's make sure that's being moved as efficiently as possible, moving in the right direction. Save the stock picking for other things that you may be interested in there. You can open a regular brokerage account and just start investing, all right? Number two, the markets will fall. Hate to tell you this, but if you're 30 years old, the markets are likely going to fall at least twice in a way that scare the living daylights out of you, right? From 30 to 65, it is highly likely you're going to experience what happened back in 2008, meaning there's going to be a period of time where the markets were doing well, like now, and then they're going to crater. And you're going to feel like the world is ending. It's totally normal. I feel the same way, and I've been through all of this before, so it happens. I don't want you to stop investing on the way down. I want you to remember that the markets recover 100% of every decline 100% of the time. Did you hear that? If you are more of an advanced investor and you look at that and you go, that's not true, Dustin. Come on, man. Look at the S&P 500. Prove me wrong. Just generally speaking, you know what I'm talking about, that the markets trend higher over the long run. You do have these little fits and starts along the way and occasional crashes. That's okay. These things happen. I want you to do it like this. When the markets are moving higher, I tell all of our customers, they know what their number is. They know how much they need to invest to hit the goal at the retirement age they want to get to, okay? So our customers know this. But when the markets fall, let's say to get to your goal, you had to do $30 a week. And so every week you're doing the 30. You're doing the 30. Everything's good. Right now, the markets are going well. Everything's good. When the markets start to fall, you're still going to do the $30, right? You know that's what it takes to get you to retirement, 62, 65, whatever it may be. You know that, or our customers know that this number will get them there. We'll take care of the rest, but they will get there. But here's what I want you to do. When the markets fall, I want you to go even 32, 33, 35, 40, right? It's hard. Look, it's easy for me to tell you to do this, but I promise you it's hard, right? But if you do this, you're buying more cheaper. The name of the game is to have the lowest average cost. The name of the game is not to buy on the way up and pay more and more and more for your investments. When the markets fall, that's when I want you to increase your deposits. Now, don't be that person that says, I'm just going to wait. What happens if I wait, the markets fall, and I go lump sum into the markets? I have a lot of customers that have been waiting years for the markets to fall. And the problem is, you know what the problem is? Here, I'm going to show you real quick. The problem with that approach is they've been waiting, so they haven't been doing their deposits. They're waiting for the markets to fall. And because the markets have moved so much, right, in the last 3 or 4 years, they've had this great move. They now need the markets to fall by about 50%, 40, 50%. What's the likelihood that that's going to happen, right? It's going to happen eventually, but what are the odds on that? Not very good. So I want you to inch in to hit your goal on the way up, and then when the markets fall, add a little bit more. This last decline, October, November, December in the stock market, that was the biggest deal I was making to our customers. I was giving them the stats of everything that was going on, helping them with their investments and saying, this is where I want you to put $1 more. In fact, I even give them a video that we did to say, what happens if you just did $1 more and that's all you could do? Right? What a huge difference. We're talking thousands of dollars difference by the time you get to retirement. Do not get scared of the markets. And I want you to think of it this way before I go. If the markets fall, and they fall in a way where you think the world is going to end, then wouldn't you want to just buy more? If the world ends, then don't we all have other problems to deal with? If the world ends, then who cares anyways? The world ended, right? So I want you to think of that. And if you go back to 1987, this is a fascinating, fascinating study. The markets essentially fell in one day enough to make people feel like this was it. The most professional traders on the planet that were in the pits, at that point you had to yell. You know, you would yell, I want to buy at this price, and they would yell sold, and then you would yell out numbers. At that point, those guys that do this every day, they thought the world was literally over, that this was the end. And do you know it was because of one guy that was across the street in his office from the trading floor who was sitting there going, wait a minute, if I go buy this discount and the world ends, then I won't have to make good on that anyways. The world ended. It's over. So he walked across the street, put his jacket on, you know, they all wear the jackets, put his name tag on, ran into the S&P 500 trading pit, and he just yelled out a number that he was willing to buy. And the entire pit yelled at him, sold. Everybody wanted to sell to him because everybody was panicking. And one guy literally stopped the markets from falling on that October Monday. It's a fascinating, fascinating study if you ever want to look at that. That's the mentality I need from you. If you don't know that story, then think of Warren Buffett. When the markets were falling, October, November, December, you notice how he went quiet? He wasn't on TV. He wasn't out there showing himself. He was shopping. He was looking for things to buy, and we found out he was buying a whole bunch of stuff, right? So I want you to think in terms of that. So number one, meet with a financial advisor, financial planner. If you need that kind of help, let them push you in the right direction. Consider us here at Jazz, or look up the XY Financial Planning Network. They're just financial planners. Number two, I want you to don't stop. Well, you got that refund, let that momentum build. Even if it's $5, I don't care. Let the momentum build little by little. Number three, I want you to just start with what you know, right? If you need help, well, that's what we're here at Jazz Wealth for. All of our portfolios are right on our website, so you can see exactly how things work. but I want you to just start with what you know. It can be index funds, mutual funds, individual stocks, whatever you're comfortable with. And number 4, when the markets fall, know that everybody feels the same way that you do, but some people are taking advantage of that and other people are running away. Did you know in December alone, $44 billion left the 401k market? All the 401k investors said, I can't take it anymore, get me out. Who was right? The markets have recovered all of that. We've regained everything we lost in December and almost everything we've lost since October. The markets are sitting at new highs here, almost new highs. So I want you to think of it in terms of that. Get in there, get your investments. The name of the game is to buy at the lowest average cost. Well, I hope that helps you in some way. Hit the subscribe button if it does. I appreciate you watching here, and we'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.